This is Chris Miglino. I'm at the world famous LD Micro Conference in Los Angeles, California. I'm here with Roger Rosmus from Goliath Resources, symbol GOT on the CVE. So nice to have you here.
Thanks.
Appreciate it. What do you got there for us?
We got some rocks. Look at that. What is that? Chunk of gold there? Slam gold.
Is that what it looks like when it comes out?
Well, in some instances, for sure. This is from our jackpot showing, which samples ran last year, 21.5 grams gold equivalent. So it's pretty heavy here. This thing would probably run, who knows, but I think a lot more than the 21.5 grams gold. Pardon me, 21.5 ounces. Pardon me, ounces. Stand corrected.
Interesting.
It's been a long day.
So then you just break this down and get this out of here?
Yeah, we crushed the material. So actually when we're drilling, it looks like this, about a core. So you can see all these circles are visible gold that we can see in the core.
So that's gold in it right there. Interesting. Wow.
So it comes in various sizes, but typically we're getting from a 327 micron. So we crushed it to 327 micron. We can get 50% of the gold just from gravity alone. So no chemicals required, no diluters material.
Well, I guess we should back up.
Yeah.
And before we even do that,
sure,
and tell the audience the business. So you guys are obviously in the drilling business. You have a project or multiple projects in British Columbia.
Yeah, in the Golden Triangle, a prolific Golden Triangle, mining-friendly jurisdiction. A lot of deposits, mines have obviously gone to production, and a lot of big discoveries have been made. And primarily Escape Creek, which is done back in the 80s, which put this place on the map when there was no infrastructure whatsoever. Things have improved substantially. Our project is brand new, never been drilled before till we came along. And the reason being is the glaciers have receded. Permanent snowpack is no longer there, exposing brand new outcrops to surface. So we are the first to ever take samples and drill this brand new gold discovery.
Interesting.
It is.
And so now, I mean, your stock has been on a rip. Looks like it's doing well now.
Doing all right.
What's the catalyst of all this?
Well, we've got an amazing shareholder base. We've got Rob McEwen. We've got Eric Sprott. We've got Crescat Capital. Just recently brought in a global commodity group out of Singapore. They own 3.5%. Rob McEwen, by the way, owns 3.9%. Eric Sprott's at 3%. Crescat Capital, they're about 14.4%. I do have a strategic institutional group that owns roughly 9.9%. And then this is on the last raise I did. I just raised $22.6 million between August and September of this year, where Mr. Larry Childress, he participated as well. So these are all kind of titans of the industry, billionaire type folks that, when they like it, they like to invest, and they don't like to lose money.
Right. And so there might be something there.
Well, as you can see, we've got gold in quite a few of our samples. The hole we drilled this year, we did 30,000 meters at Sherbet, 64 holes, but 92% of the holes actually had visible gold in them and or abundant visible gold, up to 32%. And when we say abundant, we're talking 4 occurrences or more of like these flakes or chunks.
So, for the people that are on here that are watching this that are not gold investors, right? Maybe they're interested in being gold investors, but they don't know what the metrics are and what they should be thinking about. What are the things that you guys have that are valuable that they should be thinking about?
Number one, who are the shareholders? So we just went through with
all those people.
They've done their due diligence. So, kind of tick the box in that regard. So they've done quite a bit of work on there, obviously, with their groups to invest. And then, can we get the gold out from the host rock? And we've proven that with the metallurgy, getting a 92.2% recovery. We sit on tidewater access. We have power. We have an old mine that is right next door to the town of Kitsault that was built back in the 70s by Phelps Dodge for the Moly mine. So that mine, old mine, brownfield site is still there.
They're still drilling a mine from 1970s.
No, that went out of business during molybdenum. So that price was high. They opened the mine. Moly crashed. Basically, everyone left the town, became a ghost town. So we occupy that town on a yearly basis during the summer when we're drilling the system out.
Okay, and you only drill in summer because it just gets outrageous. You can't do winter's highway in Canada.
I mean, we could drill year round, but it'd be very, very expensive. Until we go, let's say a scenario would go underground, drive an adit in, then we could operate year round. So that's certainly some of the key aspects, I would say. If people are looking at gold, that's one way to get exposure to gold, as versus buying the metal itself directly, is the upside of our share price. As an example, a company called Great Bear Resources. They drilled, they found a new discovery, and actually I think it was an old discovery, but they kind of were drilling around it. So best place to find a new deposit is near an existing deposit. So they were taken out by Kinross for $1.8 billion Canadian. After I think they drilled about 300,000 meters. They sort of proved out, I think it was around sort of 3 to 4 million ounces with upsize up to 8 million. They did never put together a maiden resource, and back of the envelope they were able to calculate, because that's so much drilling done, that had the confidence level that certain zones were have the continuity and predictability. One of the things that we do have as well on all of our loads is we're hitting these loads. We have 6 main loads, veins. We're hitting them plus or minus 6, call it plus or minus 10 meters, which shows that it is robust. There is predictability there, continuity. And for us, it's just a matter of continuing to drill out these horizons to increase the confidence level, to show, it's called the senior miners, like the Newmonts of the world, the Barracks, or the Kinrosses, Agnico Eagles of the world, that there is continuity throughout these.
And then they step in once you do that?
Yeah, we're taking the risk, because the senior miners, they got rid of their exploration teams many, many years ago, like a decade more maybe.
So they let you take the risk.
All the juniors take the risk, find the new discoveries, and they'll come in and they just rather pay for it.
Interesting.
Yeah, so that's really kind of the exit strategy if someone's looking to get into a junior or resource stock such as that.
And so at what point does that senior miner step in and take somebody out? What are the catalysts that have to be there in order for them to do that?
Yeah, it's, again, down to drilling. Drilling, hitting high-grade zones. Again, we've got some really high-grade zones, particularly one, the Bonanza. We call it the Bonanza Golden Triangle, where we're seeing mineral we're getting assays of over an ounce per ton up to 9 meters. So think about the 9 meters, it's like 38 feet, 40 feet of 1 ounce material. So over this one particular area, if we were to get that all the way through, it'd be pretty significant. That would light the fire on all senior miners looking for a new asset.
And when senior miners come in, and do they buy the mine outright, or do they do a licensing deal with you? How does it work?
We would sell the company, sell the project essentially.
Gaia.
And however, keeping that in mind, obviously that would be door number one for us. And then with that, the sure bet discovery would be the required target. And then we've got 91,000 hectares of land, which still needs to be explored. And guess what? There's lots of glaciers and ice and snow still there melting. We're finding brand new outcrops every year. We drill tested a new target 40 kilometers to the north. It looks very promising as well, which right now we're not getting any value for.
And how do they create the multiple of what they're willing to pay, in the scenario?
Well, they have their own, I guess, methodology.
But what would you expect? You have your expectation.
Well, forget expectations, just as far as I saw Crescat Capital did a study on the takeout targets, valuations, and I think they came in around 20 to 22% of NAV. So as an example, if we had, let's do the math, 10 million ounces as an, it's hypothetical. Gold trade, I think we broke a new high, $2,800 US. So 10 million ounces times 2,800 US, take 20 to 22% NAV of that, could potentially be the takeout number.
It's a good number.
Yeah, I mean, right now we're 177 Canadian market cap. And again, I look at the Kinross acquisition of Great Bear was a $1.8 billion market cap as well. And that started out as a, $10, $20 million company, right? And so did we. I mean, that's where we started. We're slowly getting there.
High risk, high return.
It is, exactly. High torque.
Right. So, but you know what you're doing. You've been in this business for a long time, it sounds like. And so if you're hitting the gold,
yes,
then I guess you're golden.
We are, and we're finding new zones every year. So it's just every year
in the project that you have, you're
fire bed. Yeah. So it's it. Well, for the most part, these new discoveries, these systems, they start out really, really big. The more you drill, the smaller it gets. Guess what's happening with us? The more we're drilling, the bigger it's getting. So we're hitting zones that we had no idea existed from the previous year. So our models will get in a new iteration for the 2025 drill program. And again, we're really going to go and assess out this high-grade zone where we get this 1 ounce material. And if we can prove out that it does have that continuity, which we believe we do have that, but obviously we need the drill points because, again, we're hitting this stuff within 5 to 10 meters plus or minus. So excellent predictability, excellent continuity. I have the same looking mineralization. And so it's the same vein. Just need assays now. So catalyst for us, so that we could propel the stock between now and or the next few months here, is we have 105 holes pending assay. So the blood lifeline of this junior resource companies is drill results. And that will drive should be positive catalyst.
How long does it take to drill each hole before you realize that there's value there?
Well, you have your model and you say, okay, our target depth is here. We expect to hit the zone between here and here. And so you would hit the target and then you would drill additional 30 meters until you hit dead rock. And then there's nothing else there. So mission accomplished once you confirm the model that, once it's been intercepted. So we do start with a model at the beginning of the season, a lot of planning ahead of time, and it's all laid out. And, we know how many meters approximately, for the most part, how much we're going to drill, how much we need to get down to the certain part of that system based on the drill pad on.
How is technology impacting the discovery of all this? Like, has anybody in this industry started to use AI to, predict where stuff might be, where gold might be in these?
There are systems like that, but again, this is a brand new discovery.
Right.
It's ability to be used for an old deposit or old mine, where you would collect all the data and have it reinterpret it as to where you should be going. Vertize us, every day it's like we're on the dark side of the moon type of deal.
All right, you don't know where.
Well, we know where the main loads are, and now as we drill below the valley floor, 4 brand new zones down there that we had no idea they existed until later in the season. A couple of them had visible gold, so that tells us, guess what? The system is much clearer than we initially thought. We're going to go drill some deeper holes, see what the heck's going on.
Interesting. All right. Well, if anybody in our audience wants some more exposure to gold, symbol GOT on the CVE, Goliath Resources. Roger, thanks for spending some time with us. I appreciate you bringing the show and tell here.
We got her.
It's funny. It's like this massive rock for this little piece of gold right here. But you're saying the gold is in here.
It's all
throughout it.
Again, the sample from the same vein ran 21.5 ounces per ton gold
in this,
and it didn't look at in the same area,
right?
Didn't look as good as this one.
And this one, even though you can't really see it, it's embedded in there.
Yeah.
And so the technology is there to break this down and suck that out.
Well, no, we cut, comes out as a whole when we cut it in half,
right?
And then we send it to the lab for assay, and they come up. We need to keep this out for our QA/QC.
Right.
So if a miner wants to come up and say, hey, show me hole, whatever, GD 24-265, show me the core, I want to see the other half. Well, it's just a way of like an auditing kind of a deal.
And then when they break this down to actually extract the gold,
yeah,
what do? They just
crush it.
Just crush it down.
Crush it down.
And then they have the ability to separate the gold out.
Correct.
Interesting.
Yeah.
Amazing.
Yeah, it is. Pretty exciting stuff.
Well, you got to be happy about where the stock is today versus where it was, and obviously it's got a lot. Hopefully, it has a little bit more to run for you.
So,
and especially if
because 105 holes coming.
Yeah, and if you're if the comps are there to sell it for a multi-billion-dollar, $1 billion, sure, you got some room to go.
Yeah, again, we just need more drilling, and we need to show that this has the legs for tier 1 asset. When a tier 1 definition is kind of a $8 to $10 million or 8 to 10 billion ounce deposit or resource. And at the same time, I do believe this will be a mine one day.
GOT, Goliath Resources, check it out. Thanks. Thanks a lot. Thank you.